Imagine waking up to rumors spreading across investor groups that early exchange appointments for the Iraqi dinar might have already been quietly offered to select individuals, and before you even get a chance to figure out what's happening, new whispers begin circulating that the Vietnamese Dong rate could be preparing for its biggest jump in over a decade, creating confusion, excitement, and a massive wave of speculation across global currency communities. If you want to stay ahead of the noise and hear clear, well-structured insights without hype or misinformation, then make sure you stick with this video till the end, because we are breaking down the most unexpected developments behind these reports and uncovering what they may actually mean for early 2025. And don't forget to hit that like button, subscribe to the channel, and turn on all notifications so you never miss major updates like this. Now, let's dive into what sparked these sudden alerts. Over the past few weeks, several unverified, yet persistent claims have been circulating about early dinar exchange screenings being quietly scheduled by certain private groups, and although there is no confirmed evidence from any official bank or government source, the buzz has been strong enough that regular investors worldwide have started questioning whether a small-scale testing phase, pilot appointment system, or internal rate readiness check might be underway behind the scenes. Analysts familiar with currency policy note that countries sometimes conduct pre-implementation tests before adjusting exchange mechanisms, especially when preparing for reforms that could impact liquidity, forex market behavior, and regional trade flows. Iraq has been gradually stabilizing its monetary policy stance, working with international advisors while restructuring banking operations and improving digital service frameworks, and these kinds of technical improvements often trigger speculation that a revaluation event might be nearing. However, experts emphasize that even if administrative preparations are happening, it does not necessarily confirm that public exchange appointments are being scheduled anytime soon. Still, the timing of these rumors aligns with ongoing conversations about Iraq's plans for expanded oil revenue management, budget restructuring, and international settlement capabilities, combined with a growing call inside the country for improving the national currency's strength against the US dollar. It's understandable why many observers feel something may be shifting. Meanwhile, as excitement grows around the dinar, attention has unexpectedly turned toward the Vietnamese Dong as well, with reports suggesting that new data analyses and macroeconomic forecasts are pointing toward potential adjustments for 2025. Vietnam has been experiencing strong export growth, rising foreign investment, and increasing regional influence within Asian manufacturing networks. When a nation strengthens its industrial output and improves its global trade position, discussions about a future currency adjustment naturally begin to surface. Economists note that any major shift would require long-term planning, but with Vietnam's digital banking reforms and expansion of international trade partnerships, the speculation about a future rate increase is becoming part of mainstream investor conversations once again. All of these factors combined have created a powerful mixture of anticipation and confusion, and that's exactly why today's video will help you understand what's real, what needs confirmation, and what signals you should pay attention to going into 2025. And before we move forward, make sure you support the channel by liking this video and commenting where you're watching from, because your engagement helps us bring you accurate and reliable content
as we continue
breaking down the sudden spike in talk surrounding early dinar exchange appointments and potential new dong rate projections for 2025. It's important to look at how global currency cycles typically behave during periods of geopolitical tension, shifting oil markets, and technology-driven banking reforms, because these cycles often influence both investor expectations and government policy adjustments behind the scenes. Over the past year, Iraq has been increasing its coordination with major international institutions, focusing on tightening the regulation of dollar transactions, combating currency smuggling, and enhancing compliance frameworks within the banking sector. These technical reforms are usually indicators of a country preparing for deeper integration with global markets, and while none of this directly confirms a rate change, it does show that Iraq is actively positioning itself to stabilize its financial environment, which is something investors have been waiting to see for a long time. Another core reason the rumor mill has been buzzing is the recent strengthening of discussions around digital payment infrastructure inside Iraq, including modernization of bank-to-bank settlement systems and improved monitoring tools for currency movement. Historically, nations preparing for financial modernization often face speculation that a revaluation or managed rate shift could be coming. However, experts consistently warn against assuming that such transitions occur overnight or without public policy announcements. At the same time, the broader foreign exchange market has been experiencing volatility as global powers adjust their currency strategies around energy exports, manufacturing realignments, and trade agreements. These global shifts sometimes create temporary windows where certain currencies gain unexpected momentum. With Iraq working to increase oil production capacity and expand international commercial channels, investors naturally raise questions about how upcoming fiscal changes could influence the dinar's long-term strength. Meanwhile, the Vietnamese Dong continues gaining attention due to Vietnam's steady economic growth, rising export competitiveness, and ongoing technological modernization. Economists who closely track Southeast Asian markets have noted that Vietnam's expanding digital economy, manufacturing development, and increasing foreign investment flows could support a stronger long-term trajectory for the Dong. When combined with various regional trade deals and diversification from global companies shifting production away from other countries, Vietnam is becoming a more influential player in Asia's economic landscape. These developments have led to renewed speculation about potential future adjustments to the Dong's exchange rate outlook. Although no official statements suggest an imminent major shift, the momentum behind the country's growth is one reason investors are watching the currency more closely going into 2025. In both cases, whether it's the dinar or the Dong, the global financial environment plays a major role. As energy prices fluctuate, as manufacturing supply chains evolve, and as governments adopt new digital banking frameworks, currency evaluations naturally come under closer review. And while rumors can often spread faster than verified information, the real value for investors lies in understanding the economic signals rather than the noise. The purpose of this video is to give you clarity and help you evaluate what's worth monitoring so you can stay informed without falling into speculation traps. Make sure you drop a comment below telling us whether you think Iraq or Vietnam will make the bigger move first, because your insights shape the discussions we bring to this community. We've looked at the underlying economic conditions driving the renewed interest in the Iraqi Dinar and Vietnamese Dong. Let's focus on what these unexpected reports could mean moving into early 2025, and what indicators you should track to better understand whether actual movement is happening or if the market is simply reacting to normal fluctuations in speculation. One of the biggest reasons early appointment rumors gain traction is the growing awareness that Iraq is trying to diversify its economy and create long-term financial stability beyond oil dependence. As the country continues modernizing its banking policies, strengthening anti-corruption measures, and collaborating with global financial partners, investors begin to imagine scenarios where these reforms translate into improved currency valuation. But experts caution that real revaluation events tend to be openly announced, carefully managed, and statistically supported. So, while internal administrative upgrades could be occurring, there is no confirmed evidence that public exchange scheduling is happening at this moment. Still, the fact that Iraq continues to increase transparency within its currency auctions and reduce reliance on informal dollar channels shows that the nation is moving toward a more controlled and modern financial ecosystem, something that could influence its long-term exchange potential. Meanwhile, Vietnam's economic rise is supported by expanding technology manufacturing, stable GDP growth, and strengthening trade partnerships. When economic indicators consistently point upward, conversations about future currency adjustments become part of normal market forecasting. Analysts observing the Dong suggest that Vietnam's improving global position may prompt gradual changes over time, though major revaluations typically require coordinated long-term preparation. As 2025 approaches, the key indicators to watch will include shifts in export performance, foreign investment flows, national budget adjustments, and international monetary policy updates. Understanding these elements will help you separate genuine movement from rumor-driven speculation. Another factor driving excitement is the overall shift in how global markets operate, especially as digital finance platforms expand. cross-border transactions become faster, and countries invest in secure monetary infrastructure. These developments could eventually influence how currencies like the dinar and dong are managed in the future. For now, the best approach is staying informed, analyzing verified data, and keeping a long-term perspective. And with that in mind, if you want more clear, well-researched, and hype-free updates about major currency discussions, make sure you support this channel by liking the video, subscribing, sharing it with other investors, and turning on notifications so you never miss a major update. Your engagement helps us continue delivering accurate, concise, and reliable information to help you navigate the constantly evolving world of currency and global finance. Now, let's continue the conversation in the comments. Tell us your thoughts, your expectations for 2025, and what you want us to cover next.